Oh yeah, baby, Forex.Today. Welcome everybody. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. Therefore, stay small, stay humble, focus on the long term, never risk money you cannot afford to lose, because you could potentially lose all the money in your account. Shouldn't be your rent money, shouldn't be your medicine money, so on and so forth. Hey, yo, you know this kid? I said, I didn't, but I know he did. Yeah, this is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex, but also energies, metals, indices, and binary options. These strategy sessions we do every day here at Forex.Today for TradersWay clients, Monday through Thursday. We're at Forex.Today. Please swing on by and join us. And every Friday at FXStreet.com. Cool. Microphone problems. I'll adjust slightly. Cool. So one thing you can do right away is search for Forex.Today and subscribe. So just go to youtube.com, search for Forex.Today, and you'll find our channel. Go ahead and subscribe. That's one way to keep in touch with us, but the best way is to go to Forex.Today. The newest video is going to be right at the top of the homepage, and an archive of videos here. And then throughout the rest of this page and other parts of the website, you will have at least a dozen Forex trading ideas posted every single trading day. Maybe that's why it's called Forex.Today. Could be a rabbit. Thought I'd break this down into an Asian session review and a European session update. Chinese September trade balance. And business confidence. I love these numbers. It's so funny, you know, when you're at the trough of global macroeconomics, right? Previous number was 1. But now confidence is way up there at 5. Like 1? What kind of scale is this? It's sort of like, you know, what's the inflation expectation in Europe, you know? Oh, well, we were expecting 0.3, but we only got 0.2. I'm like, how could you even measure the difference between 0.3 and 0.2? It makes it sound so scientific, right? But anyways, you're like, either way, there's no inflation, but whatever. So, you know, business confidence, it's skyrocketed, guys. 3-month high from 1 all the way up to 5. Woohoo! It's pretty funny, though. Trade balance. This is the difference between money going into the economy and money going out of the economy. And, you know, China should be exporting way more than it imports, right? Oops. European session update, since this is the London lunch that we're in right now. Disappointing inflation figures out of the UK. Turns negative. Wah, wah, wah. So what does that do for traders that are anticipating rising inflation rates, rising interest rates in the UK? Yeah, that's going to disappoint a lot of people that were long the UK, right? Long the British pound. And so that's going to be priced in, because this might throw off that expectation. And remember, when you're looking at this inflation data, it's going to take a while for us to work this number out. If you're looking year over year, right? So now we got to go for 12 months to drop that off the number. But it's not a huge negative number, but we're supposed to be, rocking it up at 2%, not, whatever. We're supposed to have annual levels of inflation of 2%, but ideally what you have now in central banking policy is sort of a flexible inflation target. So if you're trying to hit 2% in the future, and let's say there's 1% inflation now, one thing you might want to do is try to get it in, inflation to 2.5 as soon as possible, and then slowly calm it back down to 2 instead of trying to stretch it out to 2 and have trouble maintaining it. So you get this sort of band of inflation. What you'd like to see is 2 to 2.5%, but keep it closer to 2. So you want to overshoot, but anyways, we're nowhere near that, and that's going to be disappointing. So you're going to see, well, how about this? What do you think will be the result of an event like this? And you don't even have to look at your chart. Let's talk about it out loud. How do I clear this? Okay, good. Yeah, it gets weak. Any particular reason why? It's inflation expectations, which eventually means to rising interest rates. And rising interest rates mean a larger yield differential. And that is, you have the interest rate the world, and then you'll see all kinds of different supply and demand curves, the supply of money and the demand for bonds in relation to the world rate of interest rates and the domestic rate. And the higher the domestic rate is over the world interest rate, the more this changes the slope of the demand curve, and higher interest rates are good, is the other way of saying it. So that's the part I enjoy at school, right? So my professor asked a question in our last class. What would happen to bond prices and interest rates if such and such happened? And I went, boom. Bonds up, rates down. But it took 15 minutes to discuss why. Love it. So anyways, European stock markets opened down. Wah, wah, wah. So disappointing numbers out of China. All right, so blah, 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 blah. There was comments that the Swiss government might raise reserve requirements, which is similar. They're trying to keep money out of their country. But that hasn't been made, blah, 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 blah. What's interesting is Miller is trying to buy Budweiser. Isn't that funny? And they might actually have an agreement put together. Great. We'll consolidate our bad beer. And Barclays has rumors that former J.P. Morgan executive could be named CEO. I had to turn it down, so I guess they offered it to the J.P. Morgan guy. But I'm busy. And what this shows here, this is our calendar. It's the 13th. I sorted this by, so I used the filter on Forex.Today to look for 3-star news. And there ain't none. So, quiet day. Cool. So let's go through the markets technically and look for some trading ideas for today. What do you think? Whoa, what happened there? Can you even see that video? Really, you just saw the Forex? It gave me some weird thing. Strange how the software works sometimes. All right, so hopefully you see charts. I was hoping, I didn't get to hear it. There was supposed to be a nice little Forex.Today video, you know, the happy video? Didn't play for me. Did you happen to see it? It always puts me in a good mood. Yeah, you saw it, huh? All right. So you should see charts, though. Really? No charts? What do you see then? Because apparently everything blank. Loading. All right, so something definitely went wrong. Hang on. Let me start this process over again. Something didn't go right with the software. Hang on. La la la. So it probably still says loading, and that's actually a good thing. Okay, full screen. Come on, software. And how is that? We good? All right, thank you for your patience, guys. I really appreciate that. And also, you know, I always save it for the end, but let me say it at the beginning. You know, thank you for being on my team every single day. I really do appreciate your loyalty. I like trading Forex. I hate trading Forex alone. So, you know, you give me you give me hope. You keep me focused. You know, I do extra levels of research. I do extra levels of analysis because I always want to give you the best. But then that means I've given myself the best. So I appreciate that. Thank you for being on my team. Okay. So generally what I want to look for here, oh, look at all my charts got moved around. What I like to look for first and foremost, if I can see correlation in the market. So let's start with the scan of USD. Okay, the US dollars on the right, US dollars on the right, US dollars on the right. Let's put all our charts on the same time frame. Okay. And if the dollar is strong or weak across the board, they should be doing the same thing. So this one generally seems down, this one seems generally sideways, and this one seems generally up. What do we see here? We see lack of correlation. At the same time, let's look at the bottom pairs. Make sure they're on the same time frames. You don't want to get caught up in different time frames. Okay, this says generally dollar weak. Let's move this way. This means generally sideways. And USD Swissy generally was way strong, was way weak, was way strong. Sideways to down, maybe? So, you know, I see not dollar strength, right? That's for sure. On the sort of medium term, right? You do see here generally just today, you see this bearish engulfing candle? This is the disappointing UK news. Now, keep in mind, I've already put you on this trade. We've been following this rollover for a long time now, and we made a lower low, then we made a lower high, then last time we pointed this out, a couple of different things. We had made a slight lower low, and the oscillator was oversold. We were down here. Okay? So one of the things that we were looking for is waiting for it to be overbought again, right? And also falling somewhere at a lower high. Couple of things that you can use to guess this. One would be the moving averages, but the other one would be price action. And you'd look at areas like this. What used to be support is now resistance. The next level up would be up into here. So if you may recall, when we were down here, one of the things we talked about is looking for levels of resistance, identifying 2 or 3 levels of resistance in which you may consider selling again. How many people recall that theme? So the question is this market still trending? Is this something that you want? Now, the 55 does suggest a double bottom. So one thing I'd be doing here is I'd be cautious in this zone. Okay. But what would you like to do now? Are you now a bear, or did you miss this and you would like to be a bear in the future? Or are you a bull? See, if you're a bull, if this stretches its neck down, it may skyrocket up. That's what you'd be thinking as a bull. As a bear, you might say, aha. So how would you trade this? Well, how about you do the exact same thing? It almost looks like the same chart. You identify a couple of levels of resistance in which you may consider selling. One could be here, one could be here. You can also use Leonardo Fibonacci and see if you catch one of those. Whatever, dude. Okay. See how it's almost exactly the same chart? So you could do it like this if you wanted to. Into the great wide open. Now, is there a chance that the R top today is just a coincidence that it's exactly 50% of the previous drop? Just a random occurrence that it's within a pip? Let me ask you something. If you were a patient and disciplined trader that traded in the direction of the fundamental and long-term technical trend, would you possibly have just simply shorted at 50% just because it was 50%? Or at least had a plan? Now Ron says only as a reversal pattern, which is good, right? So the question is, what do we have, right? So what do we do now? Is this bearish engulfing candle important? Now let's go back to the daily chart And let's remind ourselves, realign the satellite, what's going on here. You can see we've already made the 50% of the macro move, right? Then we dropped, made a lower high, then we dropped, made a lower high, then we dropped, and we might have made a lower high. Okay. The other thing we talked about is it's probably not going to make a move all the way down to 130, but we'll see. Okay. So you can see this, what I've drawn here is the top, right? It topped out at 50%. This shows that we were still making a series of higher highs. This high, then that high, but then this is a low, and then a low, so on and so forth. Okay, so this is rolled over. And how does the Forex market reverse? Is it a V-shaped reversal, or is it shaped like something else? Like an old man easing into a hot bath. Thank you. So anyways, so technically I think that's very interesting. Okay? Now I'm still hoping, but I might be off here, because remember, what we design in strategy is essentially a hypothesis that needs to be proved with fact, using scientific methodology. Now, I had a hypothesis that we would get unusually good fundamental news in the economic data for the UK early next year, primarily from the dropping off of old data from the year before. Well, we still need good data, don't we? We're not getting great data. So I might be early, so we got to pay attention. So anyways, isn't this a beautiful chart though? Right? That's beautiful, isn't it? Now I believe YJ shorted the pound yen yesterday. Yep. So then, you know, we can come back to the dollar if you want, but this looks like it's rolling over faster than the others, right? So let's talk about yen. 220 pips. Good job, YJ. Yeah, so let's put this together. Once again, let's make sure our time frames are correct. Let's on these charts, let's use hourly. You know what? No, let's go all day. Let's go daily on all of these. Day. Okay. Okay, so how are these trends? Oops. How would you describe these trends? Varied. Yeah, Alex says varied. Yeah. So is there a strong positive correlation, strong negative correlation? See, look, in this case, the Japanese yen is on the right of every pair. As a trend trader, what I'm looking for is everything going down or everything going up. And if they're doing one or the other, right, then there's strong positive correlation. And I know it's a yen, an issue for yen. Either yen is ripper strong or yen is very weak, and I put together trade plans, and I do things like relative strength exercises to, if the yen is weak, I start buying the strong things first. If the yen is strong, I start, selling weak things first. But, let's see, generally down, generally sideways. So I probably would stay away. Oops, let's give this an extra click. I'd probably stay away from euro. Because what this shows us is that, oops, come on days when euro is weak, the yen can very often be fairly weak. Maybe it, it does go up, but I think the other ones would go up faster and you'd just be better off. And on days where euro strong, well, maybe yen is fairly strong that day too, relative to the other currencies. So usually, I think you'll get bigger moves on these other charts. Now, we talked about, I believe it was this trade on a different chart, of course. What's that orange line? Oh, this is the one that goes back monthly, isn't it? I believe we talked about, you know what, I'm just going to get rid of that. This was a trade that we discussed how to use a binary option for, right? Weren't we in here? And I said the trade has been generally down, but if you're a bull and technically it's still down, but fundamentally it's up, how do you get into this trade? And I explained how to get into this trade like a hedge fund manager and using a binary option to reduce your risk by 40 to 50%, but still having unlimited upside plus interest. That one. In fact, it's probably still on the website, right? Into the great wide open, under the skies of blue. It's this one from Thursday, I guess, right? Okay, you want a link here? Oh, I lost my mouse, hang on. Cool. So we got that process. Let's zoom out now. And has this bottomed out? Maybe. Same sort of idea. How about pound? Not nearly as pretty for a potential reversal, right? So let's kind of break this down. Right? Not necessarily making a series of higher highs and higher lows, but also can you see there's been a change recently where we topped out here and we topped out here. What's happened recently to suddenly bring on yen strength even though we've had yen weakness for 2 weeks? Risk off. You'll have to explain yourself a little bit there because that doesn't feel like the right answer to me. No maybes, Alejandro. Maybe this, maybe that. There's no maybes in Forex. All right, gotta go. All right, see you, Andrew. Japanese stock market falling by 1%. Yes, why? It's not a surprise, guys. Come on. We even talked about it yesterday. Well, it's not no QE. There is QE, so I'm going to be a stickler here. You have to say it properly. There is QE. There's going to continue to be QE in Japan. So let's be factual here. No extra QE. So, right? Kuroda, the head of the Bank of Japan, has suggested just yesterday, okay, just yesterday, suggested that there isn't a dire need to increase quantitative easing. That is more specific. Okay, the head of the Bank of Japan. Now, does this seem like something that a professional Forex trader would know? That you're actually paying attention to the bank of the leader of the Central Bank of Japan? Remember, I think it was Monday. I don't even know what day of the week it is today. It's probably a Tuesday. Honestly, Monday already seems like it was 3 or 4 days ago. That's so funny. But I believe yesterday we looked at the calendar, and there was like 6 or 7 people. Yeah, yesterday was a holiday, right? Yeah. So I worked yesterday. Being a currency trader, the markets were open. It was a holiday. That doesn't matter to me. So anyways, we looked at the calendar, and because it was a holiday, there wasn't much news release, but it looked like there was like 6 or 7 different central bankers talking. Right, so anyways, that video is on the homepage. Did anyone miss? Because I might have told you I was going to take the day off, but then I didn't take the day off. I mean, it's just weird like that. Who takes the day off? But if I, so anyways, you can go right here on the homepage, Forex.Today. And we go over the COT together in the calendar. So if you want, that could be reviewed, right? Yep. So anyways, one of the things we discussed is, there's a lot of central bankers speaking. Like, there must have been 6 or 7 different speeches yesterday by various banks, central bankers. Wouldn't it be cool to just get in on that? Read it, watch it, pay attention, read about it, or just, clue in, right? Tune in, turn on. So anyways, the Central Bank of Japan has said that quantitative easing seems to be enough right now. Well, they're not hitting their target. So remember, that's what I was talking about a couple of months ago when I analyzed the facts. Then I come up with my hypotheses, and my hypotheses which is another form of, an educated guess, is that they would increase quantitative easing because enough time's gone by and that they're not hitting their goals. That was my hypothesis. I think some other investors in the market would have thought that, would have gotten in on the weakness, which is a form of front running, and then have just learned that that is probably not correct. You understand? So what does that mean to you as a let's say a newer trader or even a successful retail trader? What does this mean? And I want you to look at the chart and interpret it maybe in a different way than just squiggly colors or, oh, this is going up or this is going down. I want you to look at this and say, why did the Aussie yen, for example, decide to go basically a lot less? Why did it go from hardcore bearish to, at least short-term bullish? Like, why did it go up for 2 weeks straight? Why now? Right? Why not here? Why not here? I want you to think about that for a second. It's not magic, right? And do you understand how many billions, tens of billions is invested into just this move here? Right? Do you think tens of billions, 50 or 60 billion dollars, $100 billion was just casually thrown down here? What was going on? And maybe it had to do with the various meetings this week, or this month, I should say, in Japan. And maybe their investors had thought that the Bank of Japan would do something to end the year with, to end the year strong, which means if you're an exporting nation with a weak currency, right? Right? That's how you end strong. With weakness, I tell you. And then, how quickly did the market adapt? It's pretty interesting, I think. So we're at a pivotal point, not a pivot point, but a pivotal point, because if you're a bear, what would your trade plan have been, a month ago? If you were a bear on this pair, would you prepare to sell up there? Okay. Now let me zoom in again. Do you think it's a coincidence that this is a 618 Fibonacci retracement? So once again, somebody in the market had a plan. Could have been hours in advance, days in advance, weeks in advance. Right? And I just want you to look at this and say, are you planning that in a similar fashion? Because to make a bullish market go bearish, it takes a lot of money, either investors getting out or getting back in, right? Either getting bearish again or taking profit on the bullish move. Okay, which means now, if you're a bull, what would you be doing? Well, again, the opposite. Okay, maybe off of this bottom or that bottom, it doesn't matter to me. Pick a bottom. Where, like I've already done for you, maybe kind of like this. Where are you going to buy? And it might not even be today. In fact, I would caution you about buying today because of the fundamental news. There may be people in the market that say, you know what, I bought Aussie yen with the assumption of an increase in quantitative easing by the Bank of Japan, and now I've just learned that the probabilities of that future action have diminished greatly. So, dare I say, I want you to think about it. Okay? So I spent 45 minutes getting you along on this trade, essentially, and reducing your risk by 40%. Now, remember, reducing your risk by 40% cost you 40 pips of insurance. So you only made 200 pips profit, but had 40% less risk. Well, that ain't bad. Okay, so put it together and plan. And I would say if the Aussie yen falls, they all fall. So make sure you know what you want to do. Okay? I'm a trend trader, so I think that way. If this falls, they all fall. Otherwise, it's not a yen trade. It's not a yen trend, right? That's what I mean. If I'm a trend trader, I'm not trading the pound on this per se. I'm trading the yen. Now, if the British pound wants to get weak, then I'm just going to pick this one more often. So remember, I describe myself as a trader of only two assets. Right? So maybe my sellable idea is this. Let's just say. Idea one. Let's do idea number one. Sell JPY, for example. Right? How about idea number two? Buy USD. Okay? I could say that, right? Now, for that to work out, what kind of macroeconomic data would support either of those? Improving or declining macroeconomic data? All would be improving global macroeconomics. Okay? Even a weak yen would suggest improving global macroeconomics. Okay? So, you would have to then say, here's my sellable idea, and we're talking about working with potential investors. I hope you don't mind me discussing this with you. Improving macroeconomic data. Okay? And so now you'd go out and you'd have to prove this. Okay? Using scientific methodology. Remember, nobody cares about your opinion. So it comes down to what you can prove. So it's almost like being a lawyer, right? Or even, no, it was 15 days, right? It's not what happened, it's what you can prove. Wasn't that what he said to the guy, the young cop? You know which one I'm talking about? Denzel Washington, Ethan Hawke. Yep. Gotta be a wolf. Anyways, so you would have to go out and then prove that. Okay? Or the reverse of that would be what you're seeing here. So we're not getting that. And currently, yens, in this particular case, this is a pound yen, is coming down. Why? Well, the Bank of Japan is not going to add additional quantitative easing, which will not weaken the Japanese yen, which will not increase let's say inflation and productivity, will not make Japanese products any cheaper for foreigners, and will not generally be good for the Japanese stock market because of all those things. So I look at this and I see the Nikkei falling. The yen is getting strong. Japanese products are getting more expensive. Therefore, future profits in the Japanese stock market fall, and the Nikkei falls. So this would be declining macroeconomic data, in particular in relation to Japan. In the UK, what's making the pound fall? Well, they have zero inflation. Now, Demeanor says, so what's that good for? Why are they not increasing quantitative easing? What's the reasoning behind that? I don't know. Why don't you download the speech? Yeah, but see, this is it. That's the smart question, Demeter. That you got it. Why? Well, why don't you tell me? Because if I was a potential investor, you can say, you know what? I see declining macroeconomic data, and I think we should be buying Japanese yen. And let me tell you why. For example, Kuroda has said blah, 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 blah. And therefore, I know, believe on what the Bank of Japan has told me, over the next 6 months, they are not going to increase quantitative easing, right? The Nikkei is going to fall. The yen is going to increase in value. Okay, and therefore we're buyers of yen. And in particular, we're going to look at other economies that are weak, like maybe the UK, and we're going to sell off the pound yen for at least 1,000 pips. But we're going to stay away from this other thing. Okay. Now, what happens to commodity currencies if global macroeconomics are declining? Well, there's going to be a big sell-off there. Oh, good. Boom. So let's look at the Canadian dollar. Let's talk about what Pelot said at the Bank of Canada. His speech, their economic data, their meeting minutes, their staff projections. And all of a sudden you got 100 pages of data on the Canadian economy and specifically the policies at the Bank of Canada. And now you're hardcore informed, and that's your job, isn't it? Awesome. All right. So anyways, there's sort of the thought process. So you should look at this Aussie yen and say, I'm bullish on macroeconomic outlook. I'm going to buy the dip. Where's the dip going to be? I'm going to identify 3 levels of support in which I might consider buying if I get a good opportunity, and I'll be ready. And if you're a bear, you're already short, or you're going to sell the next rally. Where's the next rally going to be? Probably in here, right, where a bull would buy it, right? So again, instead of chasing price, right, just imagine a dog running in circles chasing its own tail. A, it never finds what it's looking for, and B, the view never changes. So if you want to change your trading results, you have to change your trading behavior. Okay? So is it going to do this? Right? Have you thought of writing an outlook for the rest of the year? So, for example, what will happen to the Canadian dollar between now and December 31st? When are the important meetings? Well, so Alex says, brings up a good point, might make you too rigid. Well, I'm not asking you to be rigid. In fact, I want you to be flexible. But I'd also like you to think ahead. At least, like, when are the next important meetings out of the Bank of Canada? What affects the value of the Canadian dollar in the intermarket? Like maybe oil. Great. Well, are there any OPEC meetings coming out between now and the end of the year? So on and so forth, right? Just like put it out there. So, for example, if there's an upcoming Bank of Canada meeting, will traders buy or sell the Canadian dollar, let's say, a week in advance? Sell the rumor, right? Buy the rumor, sell the news? Is that how it goes? Or is it sell the rumor, buy the news? Whatever. Think ahead is all I'm saying. Right? It might be helpful. Again, I'm just trying to break up the let's say the negative routine of sitting down for the day and then trying to figure things out. I wonder what's going to happen today. I wonder if it's going up today, where we can look at some of these trends, and this is what I'm trying to get you to recognize, is some of these things happen for a reason, right? And you don't want to figure it out 3 days after it's already happened. So I'm just trying to change the perspective slightly. Okay? All right, so correlation. So I look at this, and currently, let's see, CAD yen coming down slightly on the shorter term. Let me zoom in just a little more. Okay? Pound yen coming down on the short term. Aussie yen coming down on the short term. Euro yen, not correlated. Okay? Now, someone might say, Wayne, shouldn't I be buying the 5 EMA? And I say, yes, if they were all doing the same thing, I would be doing that. But when I see, do you guys ever watch Sesame Street? As a kid, I'm assuming? How's it go? 3 of these things belong together. 3 of these things are one and the same. But 1 of these things don't belong here. Now it's time to play our game. It's time to play our game. Right? And then you have to, like, as a kid, of course, Guy watched it in French. But anyways, you got to look at this and say, well, you know, yen is strong versus the Aussie, yen is strong versus the pound, yen is strong versus the CAD, but yen is neutral versus the euro. Which one is different? Oh, yeah, I know which one, Guy. Sorry, Guy. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. My favorite, though, is, oh, the moon is blue, it's a big balloon. It makes you shroon, it makes you croon. It's heaven being on la loon. Moon, shroon, Saskatoon. So anyways, yes. Yes, I grew up in Canada. Who's that, Rady? So anyways, I look at this and say, if I'm going to do anything today, I'm going to buy Japanese yen against everything except the euro. Okay? So therefore, no, I'm not going to buy that 5 EMA. Why? The yen is strong. Why would I sell it? So correlation anyways. Now another thing that I look at, and I'm just trying to get you through routine. Remember, I don't think it's my job just to tell you stuff, right? My job is to teach you stuff. So I'm just taking you through my thought processes and the positive trading habits and all that kind of stuff, right? Now, when I say buy, Rick, what I mean is, you're saying USD in range, why would you buy it? Yeah, well, that's good, right? Right? Okay. So another thing that I look at is the intermarket system. The intermarket, in this case, commodities. Are commodities trending? Well, I'm on an hourly chart here, and it seems like they are. Look at roll reversal, right? Look at roll reversal. Look at roll reversal. Seems like a trend. Generally, commodity currencies will follow that trend. Okay? Generally. Let's look at oil. Back out a little bit. Okay. Did somebody sell it at 50? Yeah. Yeah, very complicated trade, right? But is there a potential change in this speculation that we've been having recently? Yeah, we went lower than this low, and we went lower than, let me change it here a little bit. We've gone lower than that low. What could this do to the Canadian dollar? There was a time in my life, a very long time ago, actually, I don't know, 8 years ago, maybe, that I actually labeled my Aussie dollar chart. I actually labeled it. So you see how I have Aussie versus dollar here? It used to just say gold. Isn't that funny? And that's because gold had a high percentage of GDP, gold sales and gold prices and gold exports had a high percentage of GDP out of Australia. Also, I used to trade South African rand based on what I saw on the gold charts. So I'd look at gold, for example, and I'd see this and I'd buy the rand. Is that funny? Just like automatically. Okay, and I would label my charts that way. And then we lost a lot of that correlation, after the crisis of 2007, because that just ruined everything. I mean, just everything had to be manipulated by central banks. And I'm not saying that in a bad way. In fact, I was talking about the Great Depression versus our Great Recession with my wife, over dinner with my wife and children. And, and I was talking about how they're similar in many ways, but just the way that economists talk about things, we basically don't have depressions anymore. We have recessions, and that's economically speaking, the Great Depression, the Great Recession were very similar as far as the depths and length of declining and even negative economic growth, right? And my wife made an interesting comment. She said, well, people lost their jobs and lost their homes, but we didn't have lines of people, hundreds or even 1,000 people outside of a soup kitchen, waiting for food. I mean, it was bad, but we didn't see people, sustaining themselves in nothing but boiled potatoes or something. And I said, yeah, well, we have the central bank to thank for that. Because the government sure didn't do anything. Remember, in the Great Depression, the central bank screwed everything up, and the government saved the economy. This time, the government screwed everything up, and the central bank saved the economy. The only time I've ever seen a coordinated effort to do anything was by Japan. I was so hopeful. I thought we were at the cusp of something, brilliant. It was when Abe created his Abenomics, and the upper and lower houses of the Japanese parliament got together and went through their election process. So suddenly you had basically the Japanese Senate and the Japanese Congress all elected to support Prime Minister Abe, whose number one goal is to do whatever it takes to save the Japanese economy and create inflation finally. And then they basically replaced the governor of the Bank of Japan with Kuroda that said, hey, I'll do whatever you want, Mr. Abe, let's create some inflation. And I thought, my goodness, what an amazing feat. I thought it was going to be like revolutionary, like, I don't know, somebody should have won the Nobel Prize or something. Now it feels hopeless. Too bad. Too bad, so sad. It was a good idea, I suppose. Poor execution, but a good idea. So, very interesting. So anyways, going back to gold and oil, it's the interbank or the stock market. Okay? So you want to pay attention to the correlation here. So if I change this S&P 500, let's change that to the Nikkei. Okay. I see this, and what do? This is the Japanese stock market. Right at the London Open. What do we do? Buy Japanese yen. Boom. Top. Bottom. Break. Cool beans, huh? Okay. Here's oil. Up to 50, immediate pullback. Lower high, amazing drop. How do we trade this, guys? Back to the 21 drop. How do we trade this? Look what happened when oil dropped. Double bottom, higher high, right? So, like we were showing before, here's the bottom. Here's the previous resistance, right? Oops, that's a triangle. Previous resistance. Okay, it's amazing, huh? So intermarket correlation, for example, is another thing. So just to wrap this up, one of the things the thing we started with is looking at the correlation of different currency pairs, what I call currency correlation. I'm either buying the dollar today or I'm selling the dollar today. And based on fundamentals, I know which one I prefer to do on the short term and prefer to do on the long term. So generally speaking, based on long-term fundamentals, if I believe the macroeconomic outlook is positive, that I would rather be buying US dollar, which means I would like to sell pound dollar, I'd like to sell euro dollar, I'd like to sell Aussie dollar, so on and so forth, and then I have to pick and choose where I'm going to where I'm going to potentially sell this, or potentially not sell this. Okay, so currency correlation, and so therefore I want to see dollar strong against everything, and in that case I may consider trading it, or weak against everything, in which case I would consider trading it, or the yen. Or pound. I'll pick the pound pairs. And what I want to see here is, okay, pound dollar seems weak. Well, what about pound yen? That seems weak. Well, what about pound Aussie? That seems weak. Well, what about pound Swissy? That seems weak. The pound, it seems to be weak. So I could just say, all right, horrible inflation data out of the UK. Maybe I'm going to sell this fast and furiously over the next day or two. I'm going to punish the UK. I'm going to squeeze everybody that bought the pound in anticipation of good economic data. I'm going to squeeze them out of their longs. I'm going to hunt their stops. And if I hit their stops by selling, then they're going to be offset and the market's going to collapse and cascade down. You see that logic? Starting by very disappointing economic data, followed by currency correlation, okay, and aggressive trading. But then the other thing that you could use in your trading analysis is not currency correlation, but intermarket correlation. So things like, are you watching the commodities? If gold is going up, are you buying Australian dollar? Remember, the Australian dollar, well, it's been going up for a couple of weeks, so the correlation's not ripper strong, but it's something, I guess, right? Well, it's something. And oil. What's oil been doing the last few days? Okay? And how has that positively or not positively affected the Canadian dollar? Because that's a Canadian dollar export, a major Canadian dollar export. And then I'll end today with a pop quiz based on intermarket analysis. Okay? What intermarket commodity are you watching when deciding to trade the Kiwi dollar? Yeah, lots of people saying dairy. Let me ask you something. Did I teach you that, or did somebody else teach you that? Looks like me. Honestly, if someone else has taught you that, I'd like to know. Nobody. Everyone stopped typing. All right, well, cool. So, well, yeah, thank you for being on my team. So SB Law asks Aussie dollar. All right, look, boom. Let's get this done. Are you a bull or a bear? Okay, some say bull, some people say bear, pretty normal. If you're a bear, you'd be a fool to sell here. One, okay, you see, role reversal. Okay, what else? Let me add something. First of all, this is the actual trade I got you long on. If you remember, it's still fibbed and everything, so I guess I'll leave it there. Let me add something for you. Trend moving average. Okay. If I'm bullish and aggressive, what is my buying EMA? $21 EMA. Color is sort of a bright red, orangey red. Doesn't seem quite right. Crimson? Yeah, Harvard Crimson. All right. 21 EMA on the 4-hour is where I would like to buy. Make it a thick line. Everybody agree? If I'm a bull, I want to buy it here. Why? Because that's what I've been teaching for 10 years. Because it's in the book. Because I put it in my book and I kind of. Okay, watch this. Boom! Shalakalaka! So if you're a bear, you'd be a fool to sell here. Right? Or, as Michael Jackson would say, you're just ignorant. You're just ignorant. So, yeah, so role reversal at an aggressive buy zone. Okay? So it doesn't mean I have to buy, but it definitely tells me there's no way in hell that I'm going to sell this here. That would just be redonkulous. Well, how would Tyson say it? Yeah. You'd be stupid. You'd be stupid to sell it. So how do you do this then? Why don't you create a trade plan? So if you were a bear, why don't you identify 3 levels of resistance in which you might be interested in selling? So let's just for fun say here. Not quite a 382. How about in here, which just happens to be a 618? Midpoint cycle level 750, so up 50 pips and then down. Let's just make this the 382. Why not? So that means in that case we'd probably range. So if you were a bear, okay, you would probably do something like that or like this. Hang on. If the 382 holds, it's going to go to the 618. If the 618 holds, we're going to go to the 1382. Okay, good. If you were a bear, you probably would be better off waiting for something like that. And even if price just went straight down right here, right now, didn't pull back, it wouldn't matter because to me, they're high-risk pips. And I'm not interested in reward per se. I'm more interested in risk. Okay? Now, a bull, remember, I suggested we were in a bullish zone for the 21, right? But check this out. You ready? Watch this. You ready? Look it. We're at the 5. The only problem is it has to go up. I don't like the bearish engulfing part. So I think if you were a bear on this, I think the up and down idea could be very good if you're a bear. And if that happens and you're a bull, then you revert to plan B, right? Remember, you're supposed to have 2 or 3 different trading zones in which you would consider buying. Plan B might be down in here, right? Plan C could be even farther down, but whatever. So just be careful. Just make sure you know what you're doing. And by knowing what you're doing, I mean whether you're a bull or a bear. And if you don't know whether you're a bull or a bear, you're always going to be early or late, okay, depending on whether you're selling or buying. But if you're very early and very late, either way, you're likely to not be successful. Joseph says, why would you want to be a bull when the commitment of traders report states that there is no bull in this pair? Well, that's somebody else's alpha, right? If that's what they decide they want to do, then that's what they want to do. It's a zero-sum game. The cool thing is if you're right and somebody else is wrong, maybe because they didn't review the commitment of traders report, then they transfer their wealth to you. That's all we do is a transfer of wealth. And maybe if you did more analysis and more research and planned your trades better so that the risk reward is in your favor, that your percentage of wins improves, that the size of your losses versus the size of your winners grow, or the size of, no, the size of your winners versus the size of your losers grow, then there's going to be more transfer of wealth into your account. Okay? And isn't that what we're supposed to be doing? Right? Am I wrong? Okay? Like I said here, guys, even if this continues falling, like let's say it goes, and you asked me whether you should sell it, it doesn't matter to me if it falls here. I want to end with this. If I believe we're at support, I don't care if it falls. If I believe I'm at support, I'd be a fool to sell. And if I don't lose money today, if it falls farther despite the support, oh well. If I'm not on it, who cares? But tomorrow or the next day or the next week or the next month, more often than not, you will lose money in that situation. And if I'm patient and if I'm disciplined, if these are 2 qualities I want to have as a currency trader, then I'd be throwing it all away by selling here. Can I be a little bit patient? Maybe, I suppose. Uh-oh, did I lose you? What just happened? Every single browser just disappeared. Wow, are you guys here? Hang on, every single browser just minimized itself. So where's, oh, including my charts. Hang on. My live account. Oh, wrong live account. Live account. All right. Wow, that was funny. Yeah, okay. So can I be a little bit disciplined? Or can I be mostly disciplined? Most often I'm disciplined. More often than not, I'm disciplined. Can I be a little bit disciplined? No, I'm either disciplined or I lack discipline. You're either pregnant or you're not pregnant. So don't say to me, oh yeah, I'm disciplined, but I'm going to sell this here. Well, then you're just, if you believe you're at support, if you use the 21 and you sell at the 21 when price is above the 21, you're not disciplined. That's it. And you might make a whole bunch of money here and you'll give it all the way back on the way down. So I look at that and just say, I walk. Now, okay, that's if you're a bull. Now, I'm actually, happy to buy dollars. So, that's that. But if I was a bull, that would be a horrible place. And even if I was a bear, that wouldn't be a good place either, right? You know what I mean? So if I'm going to sell this, I'm going to sell it high for all to see. I'm going to wait for levels of resistance, and I'm going to wait for the rally. The rally, in my, if I was a bear, the rally, in my humble opinion, would be incorrect. Price would be overpriced, and I would correct the market for it, and there would be a transfer of wealth to my account. Because simply, price is moving in the wrong direction. So, I'll fix that. Okay? Peace on earth, may the pips be with you, may your profits be above average. I'm going to upload the video to Forex.Today. Should be up there within an hour. Hey, when you're ready, please open a live account at TradersWay.com. We want you to be successful. That's why we're doing these webinars. So when you are confident and successful and you're ready to open your first live account or transfer $1 million over, choose Traders Way. And do it because we're doing these webinars, huh? Pay it back. I'll see you tomorrow. And the next day, and the next day, and the next day. Cheers.